Can Bitcoin solve the recession affecting world economies? Hello, and welcome to our channel. Today, we're going to explore a hot topic in the world of finance. Can Bitcoin solve the recession affecting world economies? As you may know, Bitcoin is a decentralized digital currency that operates independently of traditional banking systems and government regulation. It has gained popularity in recent years as an alternative form of investment and payment. But can it really solve a global economic downturn? The world is currently facing a recession caused by a variety of factors, including declining consumer spending and business investment, rising debt levels, and the ongoing pandemic. Governments and central banks have implemented a range of measures to stimulate their economies, such as lowering interest rates, providing financial support to businesses and households, and increasing government spending. But what role can Bitcoin play in all of this? Some proponents of Bitcoin argue that it could be a solution to the current economic crisis. They point out that Bitcoin's decentralized nature means that it is not subject to government manipulation or inflation. They also argue that Bitcoin's limited supply, there will only ever be 21 million Bitcoin in circulation, means that it is a scarce asset that could potentially hold value in times of economic uncertainty. However, not everyone agrees that Bitcoin is the answer to the recession. Critics argue that Bitcoin is still a relatively new and volatile asset that is subject to wild fluctuations in price. They also point out that Bitcoin's limited adoption as a payment method means that it is not yet a viable alternative to traditional currencies. The popularity of Bitcoin as an alternative form of investment and payment. The host can explain that a recession is typically characterized by a decline in economic activity, including consumer spending, business investment, and job creation. The COVID-19 pandemic has exacerbated these effects, leading to widespread economic downturns around the world. The host can also introduce Bitcoin as a digital currency that operates independently of traditional banking systems and government regulation. The rise in its popularity can be attributed to its potential to provide users with greater control and privacy over their financial transactions. Bitcoin's potential solutions to the recession. In this section, the video can explore the potential ways in which Bitcoin could provide a solution to the global recession. The host can explain that some proponents of Bitcoin argue that its decentralized nature and limited supply make it a valuable asset in times of economic uncertainty. Unlike traditional currencies, Bitcoin is not subject to government manipulation or inflation. Additionally, Bitcoin's limited supply means that it is a scarce asset that could potentially hold value in times of economic crisis. The video can also provide examples of how some investors and institutions have turned to Bitcoin as a store of value during the recession. For instance, some companies have started to allocate a portion of their treasury reserves to Bitcoin, and some wealthy individuals have also invested heavily in the digital currency. Bitcoin's underlying blockchain technology allows for transparent and secure financial transactions, which could be particularly useful in the context of economic instability. Criticisms of Bitcoin's ability to solve the recession. The video can explore the potential limitations and criticisms of Bitcoin's ability to solve the global recession. Additionally, Bitcoin's limited adoption as a payment method means that it is not yet a viable alternative to traditional currencies. Inflation has been more of a persistent than a transitory phenomenon of late. Largely driven by the global response to the pandemic, financial markets are seeing a steady rise in inflation rates worldwide. Is inflation good or bad for an economy? Inflation reduces a currency's purchasing power. So does this mean that inflation is bad? Not necessarily. Most economists believe that moderate levels of inflation can benefit an economy. How so? A moderate inflation rate drives consumer spending. This is crucial for any economy to grow and is also why the U.S. Federal Reserve targets a 2% inflation rate in a bid to stabilize prices. In a healthy economy, stable and moderate inflation rates are to be expected. Economic growth is characterized by increased spending on goods and services by consumers and businesses, and demand that exceeds supply. As demand surpasses supply, producers raise prices, driving inflation. In this context, inflation can be considered a good thing. However, any rise or fall in prices that happens too quickly is generally not a good sign. A rapid increase in prices drives consumers to anticipate further increases down the road. Consumers may then resort to hoarding or purchasing more goods and services now in anticipation of higher prices in the future. When this happens, consumers hold off their purchases in anticipation of lower prices down the road. As demand continues to spiral downwards, producers also keep lowering prices to attract buyers. Do cryptocurrencies experience inflation? Yes, cryptocurrencies experience inflation, even Bitcoin, which is often seen as inflation-resistant. Much like gold, Bitcoin experiences inflation as more of it is mined. However, given that mining for new Bitcoin is automatically reduced by 50% every 4 years, inflation rates are also bound to decrease eventually. As long as Bitcoin's value continues to rise against fiat currencies, Bitcoin's typical annual inflation rates aren't usually a major area of concern for investors. Other cryptocurrencies, however, may perform differently. Stablecoins, for example, are pegged to fiat money and can be considered a low-volatility cryptocurrency for saving money. However, stablecoins are also subject to inflation and could lose value over time. As their reserved currency loses value, so do the stablecoins. So, what's the verdict? Can Bitcoin solve the recession affecting world economies? The answer is, it's complicated. While Bitcoin has potential as a store of value and a means of investment, it is unlikely to have a significant impact on the global economy in the short term. Governments and central banks will continue to play a crucial role in managing the current economic crisis. Thank you for watching. If you enjoyed this video, please like and subscribe for more content. And as always, feel free to share your thoughts and comments below.